Is it good to sell puts on dividend stocks? Have you ever wondered if selling put options on dividend stocks is a smart move? Let's break it down step by step to see if this strategy works for you. First, let's clarify what a put option is. A put option gives the buyer the right to sell a stock at a specific price, known as the strike price, before a certain date. When you sell a put option, you receive a premium from the buyer. In return, you agree to buy the stock at the strike price if the buyer decides to exercise the option. Now, why would someone sell puts on dividend stocks? Dividend stocks are shares of companies that regularly distribute a portion of their earnings to shareholders. These stocks are often seen as more stable, which can be appealing when trading options. One major benefit of selling puts on dividend stocks is the immediate income you receive from the premium. This can act like a synthetic dividend, helping to offset any potential losses if the stock price decreases. If the stock price remains above the strike price, you keep the premium and do not have to buy the stock. However, if the stock price falls below the strike price, you may have to purchase the stock at that price. This could actually be a good opportunity if you want to own the stock at a lower cost. Another practical approach is using this strategy to dollar cost average into a position. By selling puts at various strike prices, you can potentially acquire shares at lower prices over time while collecting premiums along the way. This can be especially attractive with dividend stocks, as you might end up owning shares that pay regular dividends. However, it is important to consider the risks involved. If the stock price drops significantly below the strike price, you could end up buying shares at a price higher than the current market value, leading to an unrealized loss. Additionally, corporate actions, such as dividend payments, can influence option pricing and stock prices, so keeping an eye on these events is essential. In summary, selling puts on dividend stocks can be a useful strategy for generating income and possibly acquiring shares at a discount. While it is not without risks, it allows you to combine the stability of dividend stocks with the flexibility of options trading. Always assess your risk tolerance and market conditions before diving into this strategy.